Bhavin Shah, founder, CIO and CEO of Samiksha Capital, is now joining in. Bhavin, thank you very much for joining in. Do you want to comment on the big tech wreck that we're seeing globally, what it means for the Indian IT companies, overdone, warranted, more to come?
I think more to come is definitely what we are observing. I think the impact of this big tech disruption is something we have talked about before, and how it is there is some deflationary impact on revenues to start with. But I think if I look at what we hear from from various companies and industry and people in the industry in terms of the productivity improvement, I think the percentages are going up. Like compared to 6 months back, today, people are talking about much bigger productivity gains, and so that deflationary impact is bigger than what people were experiencing. And I think is what Indian IT companies will have to deal with, while we continue to see them having those relationships with customers and basically being required to provide their services. I think there is a big deflationary impact on their revenue pool, and I think that's what they will have to deal with. And I think so. I think yes, there is, and there could be more to come.
So currently, the revenue deflationary impact is seen about 2 to 3% on an annual basis. We spoke to Hexaware, and even they said that over the course of the deal, it's of course much larger, but annually it's about 2 to 3%. You're saying actually the number is going to go up. How much more? And in terms of earnings expectations, do we need to start downgrading EPS estimates?
See, I think 2 to 3% would be, very, I think it would be, I think, one can probably start to ignore if it's only going to be 2 to 3%. But I suspect it will be bigger than 2 to 3%. And I say that because, yes, there are, if you look at the entire code, software cycle, there are multiple elements of it. Code development is only one of them. There are other aspects of it as well. Whether, basically specification, program design, documentation, the testing, and then ongoing quality assurance. But I suspect AI could have impact on other segments as well over time. And I think AI is surprising us with the magnitude of impact it is having. And I think we have seen many announcements over the last few days. And while companies who announce those may have a tendency to exaggerate the impact, I think in reality, there is definitely that impact happening in all areas that we had earlier probably not even anticipated. So I would say that 2 to 3%, if that estimate is right, is great. But I suspect it will be greater. And yes, that would obviously lead to an impact on the EPS, even if the companies are able to retain their margins. If the revenues are not growing, or even maybe experience a potential erosion for at least some period, that is that impact that we'll have to worry about. I think this is still a very evolving situation.
Yeah. Bhavin, hi, morning. Now put on your investor hat, right? The point is the actual earnings hit may not happen, but P's can change very quickly, right? P multiples. That's the problem for now, right?
It is definitely a problem. No doubt about it. And our earnings impact could also be there, right? If the revenue growth is not going to be there, or less than expected, then there'll also be an EPS impact. So yes, it could be both. And I think the other thing to think about is what other sectors could be impacted by this beyond Indian IT, because obviously Indian IT is a big job creator, and there are relevant sectors that may be affected if there are fewer jobs.
Yeah. No, I only asked the P multiple question. For example, right, numbers will come out and say numbers don't show too much of impact. I mean, stocks have all sold off and numbers come out and numbers are all okay. This quarter, next quarter, they're again okay. So should that be a signal to buy some of these companies or no? I mean, the point is that it's a multiple kind of a derating right now. So it's kind of that cap is there now, because at some point the impact will show through. That was my question, because a lot of people will point to next quarter, the quarter after, and say, well, this is all halabaloo. Nothing has happened.
I mean, I think there will be all types of investors. Some might have a more bullish view of things, but I would say that on the whole, when there is so much, there is such a fast-moving technology having such massive impact, many will prefer to stay on the sidelines and sort of wait it out, and that I think will mean that there is definitely a risk for further multiple contraction.
Do you think, so one big impact is going to be revenue deflation, which is much more than what the industry investors are currently penciling in. But do you think this has also injected a lot of uncertainty? Will customers think twice, thrice before signing up a very large deal because the AI architecture itself is changing? So we've gone through a period when decision-making was slow, spends were not taking place. Does that get extended? And how much of a problem will that be?
So I think the reason why, yeah, there's a very valid point, Rima. I think the issue is that the things are moving so fast that, even from my personal experience of having, in-house software activity, by the time we, let's say we take on a project, by the time we finish it, we might realize that, we could have done this differently based on availability of some new, AI tool. And so I think, yeah, that affects that is likely to affect decision making as well in some cases. And so, yeah, that also is the factor that one has to keep in mind.
Yeah. You own Sonata in your portfolio, right, Bhavin?
We used to. We currently don't own.
Any IT names in your portfolio?
I mean, we have some names, but we are reevaluating our positions. I think the announcements and kind of data points over the last couple of weeks have been pretty dramatic.
So you were likely to sell down your holdings, whichever holdings you have in IT stocks? I mean, that's the direction when you reevaluate it?
Yes.
Okay. And what about global AI stocks? You track that also very closely. Are we at the cusp of a deeper correction in big tech names?
So we took, we reduced our global tech. We're very heavily in tech in our global portfolio. We took sharp reduction in those couple of months back. After that, market sort of even rallied a bit, but then it has now corrected significantly. And yes, indeed, I think the issue there is that if you look at the whole AI race, there are several horses in that race, and they are all spending very aggressively to be the winner in the race. And chances are that not all will be the winners. And so, yeah, I mean, then the earnings growth, and I know there was also a very massive multiple expansion in the global tech, the large tech names. So that multiple contraction is also going to play in those names as well. So I think, yeah, one has to be very careful in that respect.
Okay.
Yeah.
Thank you very much, Bhavin, for joining in. Just counting down to open, Prashant. But this is an ongoing story.
Yeah, it's an ongoing story. Bhavin, thank you very much, and hope you come back as we track, as you reevaluate your portfolio and holding in IT stocks, and I think everyone else is doing that as well. Thank you for being here.